Welcome back. You're watching Metropole Television. This is a Business AM. Let me take time to welcome you to your economic review this morning. We're joined by Philip Mwangele, who's a leadership governance and consultant. How are you doing, Philip?
I'm okay.
Happy to see you around, man.
Good to see you. Thank you for having me.
It's been a minute.
It's been a while.
Welcome back.
Asante.
All right, we are also joined by Arnold Nkasale. Arnold, good morning, sir.
Good morning to you. How are you?
Anytime, man. We are doing fine. So let's attack that first story. The International Monetary Fund has warned it will continue to put anti-money laundering conditions on its loans to limit theft of funds, potentially putting it on a collisional course with Kenya, which recently lifted some of the measures critical to fighting the virus. Last month, Kenya lifted a requirement for individuals or businesses to disclose in writing to the bank the source and destination of withdrawals and the deposits above 1.11 million shillings. Now, the IMF, in its June 2021 review of the Kenya program, had asked Kenya to increase monitoring and supervision of transactions involving politically exposed persons and other high-risk customers vulnerable to corruption. In line with this, Kenya told the IMF it had increased monitoring of cash transactions involving large sums of money and flagged 3,000 suspicious transactions, which now contrast sharply with a move to entirely lift cash transaction reporting. While opinion is still divided on that, economists argue that the new move is set to stimulate a business, especially in cash-intensive sectors such as retail and construction, that had been restricted by the reporting measures to come back into the banking system. Good. Let's look at how we've been borrowing then from IMF, and you can check that trend all the way from January this year up to where we are, and we're going to check it all the way to July. There's that increase though as from May to June as well, where we took those big loans that were supposed to go into supporting of the coronavirus pandemic action in the country, and also propping up that budget, which was also as a result of the economic depression brought about by the coronavirus pandemic as well. Again, if you look at our outstanding debt from IMF, you'll borrow it, or you'll see all the way from 2016 to 2020, that increase that you can actually record from 2019 as well. Very big again in 2020, and we're bound to see that continue in 2021 because there are more plans to borrow more as well. Again, let's cross over to the next data set this morning that is going to be an indicator again on how we've been relying to IMF, and we shall be showing it to you once we have it as well. Fantastic. Arnold, let me begin with you this morning. Among those, some of the things that we are celebrating, and I don't know whether that is actually been actioned now or still in the pipeline. The president wanted to increase that ratio of the amount that you have to declare the destination and the source from 1 million to, I don't know what they wanted it to be, because we're still waiting for that to come out clearly. Was that going to be a benefit, Arnold, really?
Thank you so much, Simba. I think you have to look at it from two perspectives. I think the first perspective, from a business point of view, most of Kenya's MSMEs are reported to be cash intensive as far as their operations are concerned. I think if you look at industries such as the real estate and construction industries, you have a lot of cash intensive obligations, particularly day-to-day obligations, like maybe payment of casual laborers and so on and so forth. However, if you look at it from a political point of view, political analysts will say this is a political gimmick just to try and shell out some campaign money ahead of 2022 elections. Now, business-wise, I think the anti-money laundering regulations that have been in place are international anti-money laundering regulations. They're not just local arrangements or local restrictions. There are international anti-money laundering restrictions and regulations, and they're meant to cover financial institutions from both local and international harm, so to speak. Because you realize we're currently living in a very dynamic and volatile financial industry. We're living in the world of digital currency, cryptocurrency. Unfortunately, with these kind of transactions going on with the blockchain and situations whereby you may not know parties who are transacting. It's only prudent to maintain these anti-money laundering restrictions and regulations.
Yes.
However, in the light of the president's what I would call again a roadside declaration, we're yet to see the nitty-gritties on how to enforce,
Yes.
because there was still a caveat that financial institutions will need to maintain and observe their normal operation mechanisms as far as these transactions are concerned. So
Yes.
it's a double-edged sword. You need to look at it from both the political and the economic point of view. However, I feel it may be counterproductive in the long run, just because of the volatile nature of the financial institution in today's world.
Yes. All right, let me bring in Philip. Philip, we've seen a lot of declarations, and I don't know whether it's okay for us to call them roadside declarations from the president. When you look at this move, would you say it is entirely a political move for political mileage as Uhuru Kenyatta steps out of government?
It is, and the reason for saying that is because, and I think one of the reasons why the president made that declaration,
Yes,
is because he has been adversely mentioned in offshore capital flight. So he's trying to save face. You remember he had made a statement with a view to trying and calm the situation, saying when he gets back into the country, when he was away, he would make a statement and heads would roll. But that has not happened. Now, the reason why that is a roadside declaration is for the very simple fact that the cap, the $10,000 cap,
Yes,
is set in law under the Proceeds of Corruption and Anti-Money Laundering Act,
yes,
and the regulations that are assigned thereto. So if that were to change, then it has to change by legislation and not by declaration, as the president is doing. And I do not see why that cap should go up if we have not even managed to stem illicit cash flow with that cap in place at the moment.
Yes.
Because one of the loopholes I find in the law and from a regulation perspective is the fact that banks or financial institutions are only mandated, for example, if you're talking about money transferring or money moving from a Kenyan account elsewhere, they can only take down statements of those who are dealing in those transactions, statements that confirm that their transactions or their source of funds are not dubious. Beyond that, financial institutions can only then raise suspicions with the Financial Reporting Center. So that for me is a loophole. If financial institutions cannot, do any further investigations aside from, just taking the declarations of the person who is transacting, then that for me raises a lot of issues. The other issue on the political side, and I'm happy that Ngusale has mentioned that we are in a political season where people are trying to raise funds. And the very reason why our borrowing has gone up even in this season is it's not just because we are, cash crunched. We are in a tough position. Yes, we are, but there are individuals who are trying to build their reserves for the elections, for the campaign period and the elections and the period thereafter. The individuals who are most notorious for money laundering are not the small timers. We are looking at politicians, people who are well netted into the system. And such individuals going to a bank or, carrying out transactions that are even beyond the $10,000, they will just need to confirm that this money has come from a business I own. This money has come from a certain project I am involved in. And that is it. And it will be, left to go. So I think there are so many loopholes, and increasing the cap is not going to help in any way.
Listen, I'll be coming back to you on that, Philip. Now, Arnold, from a business perspective, really, this is something that has been in operation. It's not like it's started last year and we're now trying to remove it because we've seen majority of businesses run into challenges. What is wrong with an individual or a business saying, I need this money because it's going to point A and this money has come from point B? What is wrong with that? Why are we viewing that as a business challenge, Arnold?
Thank you. I think now, anytime you're doing a financial transaction, if you have any sort of justification for that financial transaction, either through support documents or through
Yes.
an existing business, it's never a problem. Actually, if you look at banks, which mostly bank maybe contractors or people who deal with with cash intensive projects, they have a way of customizing solutions for them, whereby if these guys come for maybe $50,000 in cash, which probably needs to go to payment of casual laborers or settlement of certain obligations on the ground or on site, it's normally allowed as long as the support document is there. In fact, most financial institutions who are supporting those particular projects are aware of such. The bone of contention comes in the event there is a sharp or a drastic change in financial transactions for an organization which ordinarily has maybe small bits of financial transactions or can use alternative ways of settling obligations. For example, if it's a business which ordinarily settles obligations maybe through checks or through money transfers like RTGSs and so on and so forth, it would then raise eyebrows when you suddenly now switch to preference of cash. These are essentially meant just to track financial transactions and basically just even to, from an audit perspective, be in a position to enable financial institutions know their customers. It's essentially an extended part of the KYC as far as financial institutions are concerned.
Yes.
So ordinarily, if a financial transaction can be supported, either can be supported or justified either through an existing business or through supporting documents which are viable and can be confirmed, ordinarily there should be no problem.
Yes. So now, Arnold, that ordinarily there should be no problem. But is it okay for us to say there hasn't been a problem then? Because it's not like our economy stopped once we did put this into law.
Actually, you hit the nail on the head. There hasn't been a problem, and I think that's why I mentioned two fronts in this particular discussion: the political
Yes.
and the economic front. From the economic front, we know that most political activities require cash. When you go to the ground, you're probably dealing with cash and so on and so forth. And that's why, if you look at it, generally speaking, there hasn't been any problem. And for financial, you realize that institutions like Moody and Finch, they do ratings of financial institutions across the globe, and our financial institutions are not immune to such ratings. And those ratings are determined based on how financial institutions carry out their transactions, how they lend, and so on and so forth. But critically, how they also observe international anti-money laundering regulations. So it would only be prudent to maintain and not just change regulations because of seasonal reasons. So in a nutshell, there hasn't been a reason to change. However, because of other inherent factors, primarily political, that's why we're seeing certain changes being made by the government.
All right. Now, Philip, if you are an IMF today and you're seated and you're trying to push reforms in the country, we've seen exactly what the IMF is pushing for. They've called for reforms in the bigger institutions in the country. We've seen University of Nairobi take those reforms. We've seen Kenyatta University take those reforms. They're pushing for reforms at Kenya Power. I mean, the big institutions in the country. And now, the biggest one, again, they're announcing that they're pushing for reforms to make sure that their money is not stolen, doesn't go into corruption. Then you have a president over the other side saying, well, let's increase that cap from 1 million. Would you be okay with that as IMF, knowing very well that this year you're among the biggest lenders to Kenya?
Well, I think IMF has had a very difficult relationship with the country,
Yes.
right from the 90s, early 90s, when the SAPs were launched within the country. But what is critical for me is to look at the kind of control IMF seems, or international money lending institutions seem to have over the country. And most of the time when we are looking for bailouts,
Yes.
We have to bend to their rules. I mean, we are looking, if we are looking at budget cuts, these adjustments that IMF is proposing, they will not lend to you unless you play ball. And most of their proposals, financial proposals, tend to have an effect on the day-to-day running of our economy. So, I mean, when we're talking about corruption, yes, there are measures that IMF will propose, but when we look at our realities,
Yes.
and especially our political realities, I will give you an example of projects that are managed in this country. Let me give the latest project, the Nairobi, the JKI Expressway. You look at the amount of money that was supposed to have gone into the project and the amount of money that the government of Kenya is paying or will pay at the end or at the completion of the project, and you identify that corruption is already budgeted for. So that is what we need to address. Yes, we have these other measures that could look like they're addressing corruption, but when you have a project that is valued at 20 billion, and at the end of the day, the taxpayer will pay 100 billion, and it is budgeted for, what is going into that project is 100 billion. And you see, this is the tricky bit. The 100 billion will go to the contractor. So it is the contractor who will sort out, the other dealings. So it is very difficult to, put a finger to where this money is going. Yes. Because what happens in most cases is that this money is sometimes paid upfront, so that the contractor does not, you can't trace. There is no paper trail between the contractor and the people who will be benefiting extraneously from that project. So there are so many things that we need to tie up, and the IMF is not going to help us. The IMF is not going to sort out, the political realities that we have.
Yes, pretty much. All right, at this point, Arnold, I would like to say thank you very much, man, for joining us this morning for this conversation. I would like to bid you goodbye so that I can continue with Philip in the studio this morning.
Thank you so much for your time.
Anytime,
Cheers.
anytime, man. All right, now let's move on to the next issue that we have for you this morning, and it's concerning IEBC and the miss of its target. And I'd like for us to take a short break, and once we come back, we continue with that story.